This is the first question that you have to attempt on yourself, by yourself, without having the solution somewhere in the background that you can peep. It's not a difficult question, it's a very basic question. So if you cannot do this, then you have to go back to the videos and watch it again and make sure that you can do this. This is very, very basic. The following information has been extracted from the financial records of Mono Limited. The company was incorporated on 1 July 2007 with an authorized capital of, just make sure it's authorized, 200,000 no par value ordinary shares, 150,000 8% non-cumulative preference shares of R2 each, and 50,000 6% compulsory cumulative redeemable no par value preference shares. Remember, this one is not equity, it is loan finance. On 1 March 2007, 3 months down the line, by means of a prospectus, the following shares were offered to the public. So this is the first share issue. Incorporated means that is the date when the company started. There was issued in the prospectus an offer for 100,000 ordinary shares of R2.50 each. In total, then, basically, what did we want to raise? 100,000 times R2.50 gives us then a total of 250,000. 80,000 8% non-cumulative pref shares of R2 each. So we wanted to raise here 160,000. And 5,000 6% compulsory redeemable cumulative shares at R1.80 each. So that gave us a total that they wanted to raise of 108,000 rand. Right. On 15 June 2007, the following applications were received. 150,000 ordinary shares, 40,000 8% non-cumulative pref shares, and 60,000 6% compulsory cumulative redeemable pref shares. Now what I want you to do is to do the journal entries for the following financial years. The year ended 30 June 2007, 2012 and 2015. So going back here, obviously this happened before 30 June 2007, and then on 30 June 2007, the company decided to issue all available shares and to repay any oversubscribed amounts. So we would like to know that this is where that year is ended. So I think I'm going to do here just like that. Oh, it doesn't want to do that. So that means that at this time, this was the end of the first part. Now the second part happens, and that is on 30 June. So let's do 27 transactions first. When we issue shares, what is the first question that we have to ask ourselves? Was there an underwriter? Was here an underwriter? No, there wasn't. So what are we going to allot then at the end of the day? We're going to allot the applications to the maximum that we were authorized to issue. So we have received applications for 150,000 ordinary shares. So 150,000 multiplied by R2.50 is going to give us a total then of 375,000 rand. How much could we allot? We could only allot it 100,000 shares. Then we also received 40,000 applications for our 8% non-cumulative shares. So therefore we only received at R2 each, 80,000. And then we received 60,000 6% compulsory cumulative convertible shares. So 60,000 at R1.80. 60,000 at R1.80. And that gives us then 108,000 rand. Now remember, the applications that we've received, that we will accumulate in our bank account, and we will transfer the counter leg to the share application and allotment account. So on the 15th of June, we would have debited our bank with the full amount that we've received. We would have credited our application and allotment account on ordinary shares equal to the amount that we have received, which was 375,000 Rand, 150 times 250. We would have credited to our allotment account for non-cumulative shares 80,000 Rand. So application and allotment account on preference shares would have been 80,000 Rand. This is all statement of financial position. And then the last one that we had there was the applications for 60,000 redeemable shares at R1.80 each. So we would have received 108,000 Rand until the date that the applications has closed. So if I add those together, it means that we have accumulated in our bank account 563,000 Rand. On 30 June, the company decided to issue all available shares and to repay any oversubscribed amounts. So now we have to clean out our allotment accounts. So if you look at your ordinary shares, we're going to clean out 375,000 because that is what we've posted there. But how many shares are we allowed to allot? Only 100,000 at R2.50 each. So we can only take to the ordinary share capital 250,000 Rand. We're going to take, what is now the excess applications that we have received. The excess amount was 125,000 and we're going to repay the unsuccessful applicants their monies. So we're going to credit bank, statement of financial position 125,000. Our declared ordinary capital account, statement of changes in equity. Then we're done with the ordinary shares. The next one is our non-cumulative pref shares. Well, we only received 80,000 Rand. There was no underwriter, so the maximum that we can allot is the 80,000 Rand. So therefore, we're going to take that 80,000 Rand out of that account. So we're going to debit that account and we're going to credit our application and allotment account on the 8% pref shares, 80,000 Rand. Please make sure that you clearly indicate that there's a different application and allotment account for every class of share that we're going to issue. And then the last one is, well, we're allowed to issue 50,000. We have received 60,000 applications. So the amount that we can transfer to this loan account, because it's a redeemable cumulative pref share, the loan account is 108,000. Although we have received, let me just see, I think there is somewhere is a calculation error. We are allowed to take to the capital account 60,000 times R1.80, which is 50,000 times R1.80. 50,000 times R1.80 is only 90,000 Rand. We've received 60,000 applications and 60,000 at R1.80 equals 108,000 Rand. So the maximum that we can take to the loan account is 90,000, and then obviously we have to repay the oversubscription of 18,000. So we're going to debit our allotment account, the amount that we've received, the 108,000, we're going to take out of that account now. So we're going to debit that account. We're going to credit our 6% redeemable pref share capital account, which is statement of financial position because it's a loan account, 90,000, and we're going to credit bank with the oversubscription that we're going to repay those shareholders of 18,000 Rand. Then we're done with 2007. On 30 June 2012, now that's the next year that we have to do, 30 June 2012, the directors have decided to redeem 30,000 of this pref share capital. Now remember, we've only allotted 90,000, 50,000 shares equals 90,000 Rand. We are going to redeem 30,000 of those 50,000 shares. And how are we going to redeem? Means we're going to pay back the capital. And what are we going to use in order to pay back the capital? We're going to issue ordinary no par value shares, and the value of those shares being 90,000 Rand. So if you want to work out the number of ordinary shares that we're going to issue, it is going to be, we're going to redeem 30,000 of the 50,000 shares. Our share capital account has a balance of 90,000 Rand. And that equals a capital value of the redemption of 54,000 Rand. Oh, why does it do this? 54,000 Rand. If we now want to find out how many shares have we allotted, then we're going to say, well, the amount that we're going to pay back is 54,000 Rand. So that is the amount of the ordinary shares that we're going to issue in total at R2.50 per share. So that will then give us a total shares that we're going to issue of 21,600. So let's recap. We have issued share capital, redeemable pref shares of 90,000 Rand. We are going to redeem 30 of the 50,000, so 60% we're going to repay. How much is 60% of 90,000? That equals 54,000 Rand. So we have to repay those shareholders 54,000 Rand. So we have to raise new capital. So we're going to issue ordinary shares to the general public out there to the value of 54,000 Rand. Now those shares is going to be issued at R2.50 each. So the capital that we're going to repay is 54,000 Rand divided by R2.50 a share means that we're going to issue 21,600 ordinary shares. So let's go and do that accounting entry. We're going to debit our 6% redeemable pref share capital account, which is statement of financial position because it's a loan account with 54,000 Rand, and we are going to credit bank with 54,000 Rand. Then, how did we fund that? We funded that by issuing new share capital. So we received in our bank account 54,000 Rand, and we credited our declared ordinary share capital account statement of changes in equity with 54,000 Rand. Now the next year, on 30 June 2015, that is the third C, the directors obtained approval to redeem a further 10,006% redeemable pref shares. Those shares, guys, were issued initially at R1.80 a share. So the amount that we're going to pay back now is going to be 10,000 shares multiplied by R1.80 equals 18,000 Rand. Now what are they going to use this now? They're going to redeem it in cash but out of profits. Now, what does that mean? Guys, it means I'm going to credit bank and I'm going to debit something. And what is that something? Retained profits at 30 June 2015 before the redemption amounted to 20,000 Rand, while the profit after tax and dividends for 2015 amounted to 15,000 Rand. So here in 2015, what are we going to do? We're going to debit our redeemable pref share capital with 18,000 Rand. We're going to credit bank with 18,000 Rand. And that is that. We cannot do anything more. Although they say it is actually funded out of profits, what does that mean? That means if we did give them more than the capital amount of the shares, so if we paid them more than R1.80 per share, then that excess, that premium that we're going to pay them, that would have been funded out of retained profit. But here we only give them their capital back. So therefore there's enough money in the capital account so that we don't have to touch our retained earnings at this point of time. So when we clear out our capital account, then there is enough money in the capital account so that we can just repay them. Then also on 30 June 2015, a dividend of 25 cents per share was declared. Now, watch out that dividends per share is only on ordinary shares. And if we declare an ordinary dividend, it means by implication that the pref dividends has also been declared. The ordinary dividend would be paid by a capitalization issue of 8,000 Rand ordinary shares, and the remainder would be settled in cash. Now, guys, the second part of this question is all how we're going to settle the dividend. So the first thing that we have to do is firstly to determine how much is the dividend that we're going to pay out. Now, that is on ordinary shares. So initially, we have issued 100,000 ordinary shares, and here we've issued another 121,600 ordinary shares. So if we write it here, it equals 100,000 plus 21,600 equals 121,600 shares, and that we're going to multiply by 25 cents a share. And that is going to give us a total dividend of 30,400. So 30,400 is going to be the dividend that we have declared. 8,000, the first 8,000 Rand is going to be paid by ways of a capitalization issue. The remainder would be settled in cash. Of the amount to be settled in cash, 5,000 Rand is payable to a South African company, and the remainder will go to natural persons. Now, that means that 5,000 Rand of dividend, which is going to be settled in cash, and they say here, it is the dividend payable in cash, and it's only cash dividends that's subject to dividend withholding tax. That is payable to a South African resident company, so therefore that is not subject to dividend withholding tax. Natural persons are all paying the full 20% on dividend withholding tax. Now, this is only the ordinary dividend, so we still have to go and calculate, number one, what was the dividend on the non-cumulative preference shares. Let's have a look here. The ordinary shares we said was the 21,600 shares multiplied by 25% gives us 30,400. The 8% pref shares was the total amount which was in issue, and that was only that 40,000 times 2 Rand a share, which gave us that 80,000 Rand. So that was that 40,000 times 2 times 8%. It was in issue for the full year of 2015, and that would have given us a total dividend on the pref shares of 6,400. What about the 6% redeemable pref shares? Now, guys, that is not dividends, that is interest. So if we work out the interest that we owe the guys, it would be on our balance at the beginning of the year, which was 36,000. How did we come to the 36,000? Well, we initially issued 90,000 Rand. There it was, 90,000 Rand. In 2012, we have firstly converted 54,000 Rand. And then further on, we converted another 18,000 Rand. So therefore, when we work out the dividend, and that last 18,000 Rand was on 30 June 2015. So that was right at the end of the year. So for the full year, the outstanding capital balance on our pref share, redeemable pref share account was 36,000. So 36,000 multiplied by 6% equals 2160, but this is interest. So let's just complete the computation and see how much dividend withholding tax are we going to pay and how much are we going to capitalize. They say 8,000 Rand is going to be capitalized. So here we've worked out our total dividend, which is 36,800. The first 8,000 is going to be transferred to ordinary share capital. 8,000, that's a cap issue. The remainder equals the cash dividend. Now they tell us that the 5,000 Rand was paid to a South African resident company. So that's not subject to dividend withholding tax. So let's take it out of there. So the amount which is subject to dividend withholding tax is 23,800, and there's a 20% tax applicable on that. So that then gives us total dividend withholding tax of 4,760. So this is all our calculations. Now let's go and record it in the books. We're going to debit dividends against retained earnings, statement of changes in equity. Total dividend, which was 36,800, 30,400 plus the 6,400. We're going to debit interest against our income statement, our statement of profit or loss of 2160. That is that 2160. We are going to take the first 8,000 to ordinary share capital. So we're going to credit declared capital ordinary shares 8,000 Rand. We owe the receiver of revenue 4,760 Rand for dividend withholding tax. So we're going to credit SARS withholding tax 4,760. And then the balancing figure we're going to take to shareholders for dividends 26,200. And then we're done with this increase.